I thought I would give you guys some a little bit of a help on the understanding of Chapter 9, especially regarding formation of corporations. When shareholders contribute property to a corporation and in exchange they get back stock in the corporation. Very common situation in business practice, and this learning objective 2 is just critical to your understanding of how this works and how it's treated for tax purposes. So I want to go through a few examples in this learning objective, and hopefully, my talking through some of this stuff can help you understand the concepts. Typical situation right here with just one person contributing property. He's got a sole proprietorship, and he wants to incorporate, and he's going to contribute property to the business in exchange for stock in the company. So he's got some assets here. The basis in those assets are right here, and the value of those assets are right here. So the thing that's important to realize is, in a normal situation, if this guy was going to transfer these assets to somebody else and get value back in return, which he's going to get stock in a corporation that has assets in it. In a normal situation, that's called a sale, and so he would be selling these three assets to the corporation with a $370,000 proceeds amount and a basis of only $270,000. So he'd have a gain of $100,000. Well, the government realizes this is ridiculous because he's not changing his economic status at all. He simply wants to run his business as a corporation, and the government feels, rightly so, that this should not cause an undue tax hardship on somebody. So they created this provision, Section 351 of the Code, that says you're not going to have to recognize any gains or losses on a transfer of property to a corporation if, and this is discussed later, the person transferring the property, or aggregated group of people transferring the property, owns at least 80% of the stock of the corporation after the transfer. So in this case, it's only one person, Ron. He's going to own all the stock after the transfer. So Section 351 is going to apply. So it says, under 351, Ron does not recognize any gain because his economic status has not changed. Okay? He simply uses the same basis as a carryover basis to his investment in the stock of the corporation. So instead of owning assets with a basis of $270,000, he'll now own stock with a basis of $270,000. The corporation will own the assets, and the corporation will have basis in those assets equal to whatever Ron's basis was. So basically, each party, the person and the corporation, just kind of steps into the shoes of the other as far as basis goes. That's the basics of Section 351. It provides tax neutrality and no tax burden on Ron for making this transfer. This discussion right here talks about what if Ron, or what if the taxpayer gets more than just stock in return? What if he gets some cash back from the corporation? So here's a situation where Abby and Bill, two people, form White Corporation. Abby's going to transfer property with a value of $60,000. She's going to take 50% of the stock. Bill is going to transfer property, value of $60,000. For 50% of the stock. Important to realize here that the value transferred correlates to the percentage of the stock that will be owned by each. That's the case in almost every situation, and it just makes sense. Two people aren't going to enter into transactions where that's not the case. And if they do, then there's some kind of gift situation going on here. So this transfer qualifies under 351 because both people are contributing property, and combined, the two of them will own more than 80%. They'll own all 100% of the stock. So it qualifies as a tax-free transaction. Neither party will recognize gain. Okay, each party takes a basis in the stock equal to the basis and the assets they had beforehand. The one caveat here is that what if instead Abby gets the stock, 50% of the stock, and some cash of $10,000? Well, this getting cash is just like getting boot when you had a like-kind exchange back in the property chapter. So in her case, she'd have to recognize gain up to the amount of that cash received or boot received. Okay, I'm going to keep going in another video.